Hello, everybody. We're back. It is Wednesday, July 12th. I'm Tom Sosnoff. He's Dylan Radigan. Mr. Radigan, from floody upstate New York.
It's a live report from a natural disaster in upstate New York and Vermont. I have to say, the city of Montpelier is underwater. There are cars in the street. If you look at the TikTok videos, it's a full Bangladesh situation. It's remarkable. The biggest flooding here was 2011. Was Irene? Was like one of those super hurricane, like September, and this is more than that. This is crazy amounts of water.
It's crazy because
in California.
I've been to Vermont, hundreds of times. I couldn't even ever picture a flooded Vermont. Like I can't even picture it.
It's like snow. It's like snow in Florida.
Yeah.
It doesn't happen. It doesn't snow in Miami. It doesn't flood in Vermont.
Yeah. How's it flooded Vermont? So
you remember in California this winter, all that historic rainfalls where there was these supercells and it would rain. I heard you actually visited your family out there and chose to enjoy some of the rain, if I heard correctly at one point. But so anyway, they apparently the equivalent of 9 Mississippi rivers, which is like an atmospheric river, fell on California in the course of some 2 days of all this water. And it's the same thing this time, where it's a giant sponge in the sky that holds more water than ever and then drops it all quickly at the same time. Madness.
Yeah. Wow.
Madness.
All right. I don't know what to say.
Well, listen, maybe it's unfortunate, whatever. I mean, there's nothing more to say. You can go 10 ways with the conversation. But it is what it is. I think that it's a summer of intense weather. I suppose if we're to try to weave this opening discussion unintentionally into a market discussion, the heat wave, I can keep going, right? I mean, there's a extremity. But I don't even know where to trade with that. Ultimately, you get into the insurance companies.
No.
But then he's like, "But you're going to trade around the insurance companies on
No.
on extreme weather risk? Like, come on."
There is no the people always used to talk about, especially on trading floor. They talk about, how do you trade an active?
What's the angle on this?
What's the act of God trade? And I would be like, there is no act of God trade. Just so you know, there is no trade for act of God. There was one time when I'm going back probably, I don't know, maybe 30 years, that there was a hurricane on the East Coast. I think it was in the Carolinas. I don't remember the exact hurricane it was, but afterwards, insurance companies were trying to raise capital. And they had gone into kind of an accredited investor space trying to raise capital. And the returns they were promising, if you would be willing to underwrite, some of the cash portions of the insurance policies, was almost 50 to 70% returns. But, obviously nobody could quantify the risk. You think
they were trying to raise money for the first 10 or 20% of the losses, basically?
Basically. And they just...
And you're saying it was a great return, but why didn't it work?
Oh, it did work. It was a layup, but people were scared to do it because there was no way they could quantify it. And after you just face an act,
because you're pricing act of God, you're saying
exactly, and it's very difficult. Like if you went to people if you went to somebody right now and they were watching the floods in Vermont, like you said we're raising money because we don't think this will happen again. People would be like, oh no, you're not getting me, So it was kind of the same thing then. A couple of people I know did it, and it actually worked out. It was a home run. But for most of us, we just kind of were like, I'm not so sure about this act of God trade. I didn't do it. And, but over the years, we've gotten a lot of emails from customers that are like, how do I trade this hurricane?
The insurance book is the biggest pool of capital on earth outside of, the government bond markets. I mean, they have a lot of money, even if it doesn't do much, other than maybe collateralize some swaps. But there's never been an angle on act of God. I can say as a financial journalist, we used to look for it in the newsrooms at Bloomberg, right? It's a great story. Find me anything.
Yeah.
It doesn't exist. I mean,
I understand. It's a tough. Yeah. I got it. It's tough.
It comes down to, though, the same discussion, which is the one that Josh initiated earlier, which is where we're going today, which is to who decides where money goes, right? So whether it's private money going into an insurance policy or a public coverage from a public catastrophe, some sort of public insurance policy, when you centralize big pools of money and then dole those pools of money out, is it better that they're doled out through private investment partnerships and banks? Or is it better that they're doled out through a political process of local, state, and federal budgets and taxes and money printing, right? If it's America.
It's a really, it's really difficult. For most individuals, because it's tax dollars that we don't, ultimately have that much control over. There's not, people don't pay that much attention, have that much concern, or care that much. When there's the potential to participate, on an individual basis, then all of a sudden it becomes interesting, because although there's no way to quantify it, the potential returns are interesting. It also helps to explain why we do what we do as in the active trading marketplace, because at the very least we can quantify the returns. Quantify the risk.
Well, when I was thinking about this earlier today, I thought of you and I thought of Tasty, because obviously Tasty's ethos is sovereignty for an individual relative to risk and reward in their life. Right. But that's like what's going on.
The example I can give is like, if you said to me, what do you think Tesla's going to do, whether it's go up or down? Let's just say I don't think it's going to go much higher than it is now. So I can write, the stock's trading. Let me just see right now. I'll give the exact price. So the stock's trading for 273 right now. So I can say I don't think the stock's going over 350, just as an example. And I know that the price I'm going to get to sell the 350 calls is based on a very efficient pricing model. Whatever amount of money that's going to be for me, that is a real quantifiable amount of money,
and totally transparent,
right, and
all that.
And it comes with a probability. This here, I'll give it to you just to show you how interesting.
And it's predictable. It's predictably unpredictable in the sense that it comes from a predictable
exactly.
system that produces unpredictable results.
So if I went to Tesla and I said, you know what, I'm going to basically sell these calls at the 350 level for August, so 37 days from now, and I'm going to collect about let's just call it 1% of the risk I put up. It doesn't really mean that much. But for taking risk for 37 days, I'm going to collect 1% with a 90% probability of profit. So I get a 1% return with a 90% probability of profit. Now, as an investor or a risk taker, I can make a decision based on that information because I know it's efficiently priced, and so I know that those numbers are accurate. So I can make an informed decision. But if you said to me, so I can make a annualized 9% return with a 90% probability of profit. Okay, that's cool. Now the flip side of that is, if you said to me, will you write flood insurance for a town in Vermont, where you get
Montpelier, which is currently underwater.
For Montpelier, which you could have a return that exceeds 100%, but I don't know. Ultimately, I don't know what the risk is. It could be greater than what you put up, and I can't quantify it at all. Which one's more interesting? A 9% return annualized with a 90% probability of profit, or some event where you could make up to 100%, but you have no idea what the risk is, and you have no idea what the probability of profit is.
And I think the answer to that question is basically a personality test. It's like the marshmallow test at Harvard, where they're like, there's two kinds of people: the people that can wait to eat the marshmallow and the people that eat the marshmallow right now. And I think that the answer to the question of who writes the insurance on Montpelier versus who does the 9%,
right,
90% is a personality test more than it is I think most people understand everything you're talking about, but I think the decision is made more based on personality than anything else.
Oof. Maybe. I don't know. I don't know. But I have I can argue both ways. But whatever the case is, that's the argument at hand here.
Right. So you're saying that the Biden structure is the call, the 90%, 1%.
I don't know. I don't exactly know what the Biden proposal is.
Well, again, I don't. Let's back away from the Biden assigning it because I don't know either.
Yeah.
So it was presented. Let's just call it a representation of more government budgets as perceived through like the Inflation Reduction Act, which has a bunch of different spending mandates.
Okay, that's fine.
For whatever the list is, which it's a whole list, right? And the debate is: are you better to have more, politically driven budget creations? Or you're better to have more banking or investment committee budget creations where like, oh, well, because Sequoia did it, I'm doing it. Like there's only two places to get it. Like, if you and I want to do a $5 billion LNG plant in Louisiana, we got two places to go. We can go to the banks and the big investment firms, or we can go to the government. No one else is going to put up $5 billion to do that. And so somebody's got to do the diligence on those budgets. And the philosophical argument is, well, the banks and investor class is much better to do that diligence because they have much more of an incentive. And they're less vulnerable to corruption. And then the Biden projection is, well, no, we want more mandated categories of investment and credit. Personally, I think both have strengths and weaknesses, which is why I ultimately think that the crowd has come out to crypto decentralization, because I think that centralized decision making at the banks or the investment firms or at the government, neither one is particularly productive, personally.
Yeah, it's a very challenging discussion for me, and it's one where I have an answer, but I don't think that I don't think it's an answer that anybody else will give. Like, so the thing I love about decentralization that I don't know that most people either appreciate or get or understand that it exists is that you can actually create a marketplace based on a pool of liquidity that anybody can participate in, and that's the beauty of decentralization. Like, you can essentially create the discussion that you just did and say, "Hey, we're building this plant in Louisiana," and if $5 billion. What?
$5 billion. It's a big operation.
And whoever wants to participate can participate as long as you participate on the terms that, as long as you participate on the terms that are decided by the marketplace.
Meaning the smart contract.
Yes, exactly. And so what ultimately happens is the deal gets priced to perfection based on the efficiency of the liquidity pool. And
is that a big where is that pool? Where does that pool exist right now to reveal that kind of?
It doesn't exist right now. That logic doesn't. That is the beauty of a decentralized market. Right now, that pool exists in like Uniswap or something. If you're making a market between Bitcoin and ETH or something like that, it's really the only place it exists. But ultimately, it will exist on a much grander scale, and that's, again, one of the things that I love about what I think the future of this argument is going to be. Right now, it's binary. So right now,
no, but the reason I want to have this discussion is because I think you and I know this is more of a truth than a skepticism. But I think just listening to myself and setting it up, it's so obvious why the first two are not appealing, much like Trump versus Biden, who needs any of it.
Right.
And so I think the reason that there's so much optimism and energy in decentralization, I think you made a very interesting point, which is that once you have liquidity to reveal pricing on a project basis then you really could have a mass exodus from the other financing models.
Yeah, and that's why, that's why the U.S. works. I mean, I hate to say that. That's why U.S. marketplace works, and that's why nobody else in the world, for whatever reason, they don't get it, or they haven't
And are
been
you
able.
just taking it for granted that the U.S. will allow crypto, that the regulatory?
No, I'm not taking that for granted. But what I'm saying is that if you're going to have a discussion over how do you create, how do you quantify risk and opportunity, and which method of raising capital or securing investment is best. It's, what I love is the free market side to it, where the marketplace determines everything, every part about it, rather than somebody trying to guess based on some outdated or legacy model. That's all. I just,
No, but I think everybody loves what you're saying. I think anybody listening to this, and rather, like, of course, if you have three IPOs, a $5 billion Louisiana plant, one is from the, credit committee at JP Morgan, plus Blackstone, BlackRock, whoever, KKR, $5 billion, or the CalPERS or whoever, or it's, the state or the federal government, or the third one is some sort of priced and deep enough and liquid enough market that's a security token that represents the project.
Well, just think about it. Like, if the government does it, it's virtually impossible. The only thing they can base everything on is past experience, and they're going to, by definition, grossly overpay, because there's no way for them to qualify the costs. If JP Morgan does it, they're going to go to a limited audience of potential participants that can afford to play, and they're going to have a very limited audience of huge participants that are going to kind of agree if they get enough players to all agree. And
they're going to get five guys at $1 billion each.
Exactly. Which means there's some market. It's more efficient than the government's proposal, but it's less efficient than what I'm suggesting, which is just a massive open it up. Just put it out
token,
there.
The project security.
That's right.
You just issue a security token on the project. You want to whatever thing is, and then press it out.
And that's kind of, this
Don't you think we have to get there? I feel like we're going in that direction. Sorry to keep interrupting.
Well, we were going in that direction. I mean, that's kind of what Solana's doing. That's the technology that's being developed. That's part of the technology that's being developed by a lot of these, blockchains, and that's essentially what it is. And Uniswap and everybody else. But the problem is that we're just, we're caught in technology, we're just caught in some kind of vicious cycle where we can't get through the regulatory side, so we can't even look at how good the technology is.
Well, plus the FTX thing didn't help, right? Like, there's just a mess in the yard.
No. I mean, everything hurts. Everything doesn't help. But whatever the case is, but there's no argument. Nobody can ever make an argument that one government policy, whether it's Biden or whether it's trickle down or whether it's, somebody else, I mean, listen, I mean,
the commission, the institutional commission of experts on whatever.
Exactly. There's no, we're never going to get that right. You can never compete with essentially it's like, it's open outcry versus closed bidding. That's essentially what it is. It makes no sense. But, listen.
So as an optimist, how far from today do you think it is till there's liquidity for the top, 100 most interesting deals in the country can be funded? Is that 5 years away or 3 years away?
Because of some of the stuff that I know that's out there, I think we're probably closer than most people think. But I think on a broad scale, on a very big, broad public scale, we're probably, for public acceptance, 5 to 10 years away. From actual technology, the actual technology already exists.
So the only gap is culture and education.
It's know-how, it's articulation, it's culture, it's learning, it's everything. It's we're probably the technology already exists.
But maybe 5 to 10 years of goofing around until somebody catches it, and then it'll catch on, like in London or in some city. You'll
bigger
have
players will dominate. Sure.
Will that actually make the, because now we're just going down the full Bitcoin conspiracy discussion, but what the heck, we're here. So if that manifests, or as that manifests, does that then weaken the influence of the big banks and big investment funds and government budgets?
Sure. Of course it does. Because it potentially gives a competitor. So it potentially creates a competitor that can service the accredited investor self-directed. So in other words, the accredited investor, which currently has to go through some ridiculous, whether it's private equity, venture capital, JP Morgan, private client, whatever it is.
Everybody's in there with their finger taking.
Everybody's taking a piece of the pie. And essentially what it does is it says to that same person, screw that, do it yourself.
And just go lit from your wallet into the security token market.
Exactly.
And be long the LNG business because you're long a piece of whatever the token is on the LNG. And so you own LNG you own an LNG factory.
You're in the pool. You're the same as everybody else. So whether it's a $1 billion company, the U.S. government, or Dylan Ratigan, you all get the same terms.
Yeah.
Based on an efficient market.
But right now, if you and I really wanted to make a $5 billion LNG factory and we needed the money within the next week or two.
We're speculating. We're just,
But I'm just saying, as it stands now, and more than ever, government.
Yeah, it's the same thing if I showed you a giant jar of jelly beans and I said, how many jelly beans are in here? You're the only bidder, but you have to get within, 50 to or 100. You're probably never going to get within 50 to 100, or you're not even going to be close. But if there's 5,000 people guessing how many jelly beans, we're going to probably get within 10. Ultimately, when everybody puts their guesses in. It's the same thing here. We're just going to create an efficient marketplace on a non-efficient underlying, just based on the sheer size of the investable capital.
So I'm going to tell you a little story, because I was with my friend Tom Sosnoff in London back in June, because he had this huge, really hot theater he rented in East London, in the coolest part of East London, called Shoreditch. It's really hot and humid, and it was remarkably enjoyable. And there's a gentleman there named Laurent Grossman. I got him up on my Twitter here. I met him. He's a tasty trader from like Belgium or Antwerp or something. Okay. And he's like self-activated in Antwerp, teaching people this sort of the Sosnoffian way, risk and all this jazz. And he says his most effective teaching metaphor is your jelly bean story. He told me that very story. He's like, I just tell them the jelly bean story. And then like, oh, more participants, better price, better information, efficient. Like, it's not a long time to get to the belief in efficient market theory if you just have a jar of jelly beans.
Yeah. I think it was Ronald Reagan wasn't he the jelly bean guy, Ronald Reagan?
Yeah. I mean, he was for sure. He was.
Well, the only thing that I got out of the Reagan presidency, and don't at me because I wasn't a fan of Ronald Reagan, but what I took out of that was the whole concept of the jelly bean. And
as a cultural item.
As a cultural item, right. Never really had much to do with jelly beans.
There's dogs, there's cats, there's men.
I love jelly beans too. Reagan liked them, I liked them. But the concept of the big bowl of jelly beans is you can guess the weight of the pumpkin too, same thing.
There's a fine Belgian man in Antwerp, a former diamond dealer.
There you go.
Who has self-directed himself to run your jelly beans across the people of Belgium. The number one issue, and that's this. I'm going to do a little integration here on a couple of other stories.
Okay.
So, incumbency, when it comes to magnetizing activity, whether it's as a bank, New York Stock Exchange or the Chicago Mercantile Exchange, where you're the anchor of liquidity. I guess what I'm simplest to make it efficient is liquidity begets liquidity, as you know, right? Mm-hmm. And so the biggest issue is moving from no one trading that $5 billion security token to enough people. And that's typically where the bank or the government will subsidize those markets so that there's liquidity or create some incentive structure. I'm curious if how you see the transition. How does that come to be? Or does it just require such popular, you need rock star deals to generate interest? I'm just curious how you go from a desert to a liquidity pool, especially in a decentralized vision, which has all the advantages, but also the disadvantage of a shallower pool because it's spread all over the place.
I think it's a lot more. I think you're underestimating the power of. I think a lot of people do this too. I think you're underestimating the power of financial logic when it gets unlocked. And they did this at Uniswap. When they unlocked the logic behind that mechanism for essentially market making, they immediately became worth over $1 billion overnight.
You're saying because the audience, the customer,
is every person we deal with up and down the line is crazy smart. Like there's no.
I saw it in London. It was crazy.
There's no shortage of smart people. I mean, the majority of our customers are engineers. There are no shortage of smart people all over the world, and there's no shortage at all of this intellectual power that's out there. What there's a shortage of is ways to both, exploit it, to use it, exploit it, to manifest it, to monetize it. And that's where the shortage is, because people are locked in their lanes. And as soon as you open that up, it creates this massive amount of demand. And so I don't think there's going to be a problem. I don't think there's going to be any kind of problem.
If there's a good security, once whatever the regulatory, once the administrative piece of this process is complete, the making markets is the least of your problems in terms of participation.
Yeah, I think so. Right.
Like talk to the regulators and talk to the, create alignment maybe between the different. What about misalignment? What about, alignment or lack thereof on the blockchains themselves? Yeah,
I mean, that's all part of the challenges and part of the risks and part of the challenges and everything else. I think that that's one of the coolest things about really neat technology is that you can move so fast, and it actually, the whole space moves so fast, that I think that's one of the good things and one of the challenges of this technology.
But do you have an opinion? Do you, in other words, you're saying, I don't know which crypto, I'm sure, just being who you are, I'll just speak, I'm sure you must be agnostic.
Yeah.
In terms of, as a businessman, you're just like, I'll make it a market and we'll make an exchange and see what happens. As a trader, do you have an opinion in that world at this point? One versus the other
No.
Point-based run or that whole.
Not really.
We just had a little show. You're still agnostic.
I am. I mean, I'm a little upset that we have so few choices right now. Just because of the regulators. I think that it was way more fun when there was more choices. But the regulators have made it very clear that they don't intend to give us lots of choices as consumers. I don't understand that. Because of all the crazy things that go on in this world. We were talking about it.
Don't you think it's like we're not going to sit? Like, remember the blue sky laws from the crash of the 1920s, the whole compliance thing, and I would imagine, if I'm just playing there, that we're preventing fraud by not letting by limiting the number of coins.
Yeah, I mean, that's true. But, like we were talking about it this morning, we were saying, Bank of America comes along and, creates false accounts, double charges you for all this stuff. This is a bank. We're talking about a large financial institution with crappy technology, and we're unable to track that for years. We're unable to get to the source of the,
or remedy it in any way, meaningful way. No remedy of meaning.
No remedy other than fines. Get to the source, because legacy technology, shut them down, do whatever. Can't do anything.
Nothing punitive or retaliate. No.
Crappy little slap on the fingernails. That's it. And
hits the margin. We'll make
nothing.
it up.
No, it's absolutely nothing. It's money under the couch, and yet. Yeah. The technology that exists today on the street that potentially could revolutionize, all this stuff and revolutionize everything we do with finance is basically just, shut down for, I don't know.
Because you're saying the new world, the brave new world is a bunch of tokens, or excuse me, a bunch of wallets. You have Tom's wallet, whatever.
No, the brave new world is embracing the technology. The brave new world is embracing technology. You know, like we look at technology on the one hand, and we think of it. You know, I was talking to Josh about this the other day. We embrace technology like AI, and the first thing that pops up on everybody's radar is that, oh my God, you know, this is going to take jobs. This is going to cost. You know, this is ultimately going to cost us jobs, part of the economy, all this other kind of stuff. Nobody talks about the efficiency of new technology and the realization that jobs that existed 20 and 25 and 30 years ago don't exist anymore today because of today's technology. Like, that's the beauty of technology, is it's constantly disrupting and replacing, which is why you move ahead. Otherwise, we would just be living in a society where our only business is, you know, tourism.
Sure.
like half the countries in Europe.
Sure. Well, yeah, Europe is the capital of that, and right, luxury goods and tourism is the whole.
I mean, and think about it, and why is that? And that's because they can't attract investment, and because there's no new technology. It's incredible, and yet we sit there.
I would say of aerospace, they're the only place where they really run money in Europe still is aerospace with Airbus.
Whatever, it doesn't even matter. But the point is, we can't look at really cool technology that's coming out today and say, oh my God, this is trouble. We have to look at really cool technology and say, yeah, this is the future, and let's just deal with it. Let's address it. Let's deal with it. Let's embrace it, because we constantly have to disrupt ourselves, and we do that with new technology. That's what bothers me the most about, you know, all these limitations and fences around, you know, digital assets and blockchain technology. It doesn't make any sense. It's technology. Why are you limiting it? Blow it open. See what you can make out of it. Could create a whole new economy.
But I mean, what of the answer that it's a threat to the political power of the incumbent, you know, the government and the banking system with their.
Is technology really a threat to the banking system here? I mean, is technology in 2023 really a threat to the banking system? Why is it going to be any different in 2029 when our technology?
Well, it's a threat insofar as the fees and all those little fingers you spoke about.
So it's a threat to the lobbyists that are paid to.
And it's a threat to the sort of income. Like if you pulled the spreadsheet from J.P. Morgan, you're like, what does J.P. Morgan spend a year on, you know, on staff? On people, right? And it's some number, you know, a huge number. And then you say, well, you know, none of that work, like all those advisory, all that research, all those things that you don't want anyway, right? From a self-directed standpoint, but that is a threat to their revenue, as you know, an example.
Hey, I get it.
But I'm saying because that's why the incumbent is not the same reason NBC or like Disney years ago had ESPN, which was the most valuable cable property on earth, right? And this was, you know, 20 years ago before Netflix, like early Netflix, like it was a pre-streaming, like whispers of streaming, but it wasn't the main dish. And the whole debate was, you know, will any of the incumbents, NBC, ABC, I forget who else, Viacom, whatever, MTV, make a move and give up the subscriber fees and give up the cable subscriber fees and go, you know, over the top, right? A la Tasty Trade as a media company. And the answer is no, right? And so my point is the incumbent banks and government is not going to advocate. It makes sense they would resist this. It makes sense they would limit it, in my opinion, politically, in terms of a threat to their bottom line.
Yeah, I'm not arguing they wouldn't, but I'm suggesting
they make the rules.
I don't know about that.
I mean, where's they? You know, come on. What do you mean?
Well, maybe next time we hire somebody that didn't work at Goldman Sachs first.
Well, first, but you got to buy. I mean, listen, we're not going to go. I deliberately, because I was thinking, I was happy not to sort of press you on the Biden versus banks discussion, because it's unfair to you or anybody. Because
I honestly, I don't understand it. I don't really understand it.
And so I'm very happy that we went the road we went, because it's much more insightful for me, and I hope for other.
Yeah, I also don't understand that. I don't like. I couldn't.
Well, how to even calibrate it and have an opinion that means anything is not. Even if it's a good opinion, it's not useful.
Yeah, I don't know how it is, but sure.
What did you thought of the Coinbase run? Just going to the bottom line, which with the, I mean, do you think that is Coinbase benefiting from the limited number? Like basically, there's no, if you want to be long crypto or short crypto without buying crypto, there's not a lot of alternatives.
Well, I think that the fact that they do not have any competition left. I mean, FTX is gone. Binance is essentially dead now. Crypto.com is probably the next to go. And, and I don't even think Kraken's left in the U.S. I don't think there's any competition other than, traditional firms. And the traditional firms have all scaled back. So Coinbase is by itself. I thought the SEC Wells letter and the whole when Coinbase, had that huge drop and announced that, that move, I thought that was an absolute buy. It was. I mean, it was a perfect call. It was hard to buy it at $50, but we did. But it was hard to even think it could go much past 60 or 70, let alone 80 or 90. I mean, at this point,
90. I mean, it ran 90.
Yeah, I know. I mean, it's
flipped over.
It's 86 today, so it's back down a little bit. But yeah, Coinbase has had just an insane run, and I don't really know what to say. I thought it was one of the best.
I guess what I'm saying is it really just a sentiment. It's sort of like the early days of the internet, where if there was anything you could buy, Amazon, early Amazon or early UUNet or early whatever, like where you just get the sentiment. It's not even who cares about your business. They're like, you're the only lemonade stand in the business.
I think people can take a lesson from Coinbase because they stood up to the regulators. They stood up to all the bullshit. They were very clear and very direct in their position, and I think they ultimately, they won.
Mm-hmm.
And I'm not sure what they won yet, but they won.
They won something.
They won something. Yeah. I mean, because to me, to win, your stock needs to be higher for you to win. And their stock is, almost 50% higher. They won. I mean, I'm sorry. Yeah. It's almost 65% higher. They won.
And when you say, it's a stupid question. I don't even care. I was thinking about Kathy Wood selling, whether like the sentiment, whether
Kathy Woods is done. She's nothing. I mean, she's just she got exposed. She got exposed, and she's nothing. She's Elaine Garzarelli 20 years later, 40 years later.
Take 10. So the security tokens 5 to 10 years away with market efficiency for a depth of how many companies? 100, 1,000, 10,000, 100,000, a million?
Deals, it could be like every deal.
Doable.
Yeah, I mean, it could be a gazillion different deals.
10 million.
Could be. Yeah, I mean, it could be.
It's just a matter of engagement.
Yeah, totally.
All right.
Yeah.
Why do you think the tasty traders are so darn smart? That's a self-serving question.
I don't think the tasty traders are any. I don't think tasty trade. I think because I consider everybody to be a tasty trader. They just don't. There's just a lot of people that don't know about us yet.
Okay.
So I think everybody is a tasty trader. I just think there's a lot of people that haven't never heard of it. Scott likes to say we're the best firm in the world that nobody's ever heard of. And I believe that. But I think that, as far as kind of, a mentality goes, there's a massive audience of self-directed investors. We've met millions of them over the last, 20, 25 years, and everybody's like really the same. They're all smart. They would all flock to this stuff in 2 seconds, and they would tell other people too. I mean, the more efficient the marketplace gets, the more people are willing to talk about it. And, and I think that's the cool thing. The more intellectually supported and the more efficient, the more people will just, it will become gospel to them. And I think that's when you have something that's really interesting.
And do you think the security token interface is some new code from Coinbase to the billion futuristic iterations, or do you think
I think the digital? I think everybody will have a digital wallet within 3 years. And I think the things that you can do from that digital wallet that'll be connected to your brokerage firm will expand the marketplace dramatically. I used to say, you're going to be able to bet on sports and stuff like that, and I think the answer is you probably still will be able to, from a brokerage firm or from a digital wallet. But being able to go into non-traditional investments into a liquid pool of liquidity is 1,000 times more interesting to me, and will also, I believe, be the future kind of smart contracts.
Which is all of the sort of miserable $0 to $10 million funding.
Exactly,
market.
or bigger.
Efficient.
Or the
100 or 500,
or the crappy venture firms or crappy private equity firms or crappy million. Funds put together by JP Morgan or Goldman Sachs or Morgan Stanley, all that kind of crap. Just get rid of it. Just cut out. Basically, what you're doing is cutting out the middleman. It's pure
Between
cutting out the middleman.
500.
Yeah, you're just cutting out the middleman. Mm-hmm. It makes sense. It's going to happen. You're going to cut out the middleman. That's all it is. You're just going to get completely.
And you think things like, whatever it is, laundering or tax evasion or drug dealing.
I mean, that's all. That's all just, that's just the naysayers. Like, let's say somebody wants to raise money for a movie. Let's talk about that. Like a classic old, like somebody in Hollywood wants to raise, Brad Pitt wants to raise money for the next movie he's going to do. Whatever. Make it a free market.
Raise 20 million, 50 million, 100 million, whatever.
Raise no million. Right. If nobody likes the idea.
Grand.
Yeah.
No million.
Create a marketplace.
Just come back. Try again, Charlie.
Create a marketplace. Exactly.
And listen, I think everybody, certainly, anybody thinking or creative would be welcome such an opportunity, given the current. This is a much more interesting conversation than anything observing the current so-called political reality. Or market or sort of.
Well, the problem with political reality is 20, 25, 30 years behind technology and business reality, because business moves in a way to create efficiency. Politics moves in a way that is impossible. It's not a game of efficiency. Okay, it's more of a game of manipulation and sales and whatever else it is, but it's old school. It's not a game of technology and efficiency. So politics can never move the same way. Not possible.
And at the moment, they're the adversary of technology, which is self-described adversary.
Which is sad, but that's what happens when you have, old Dukakis, that are in the lead for, to run this country. I mean, nothing scares me more, than the people that are currently running that could be running in 2024. I mean, from narcissists to idiots to the
selection process. It selects for totally different variables, which are not based on
I know.
Anything that's dealt with, performance.
It's just scary. It's just scary. Anyway, that was fun, Dylan.
Revelatory.
I like that word.
Truth. Revelations. Listen, I'm moving you to a papal position. I'm just trying to elevate myself to one of the disciples. Tony will be right next to you there. He's obviously like your Paul or whatever the main guy was there. But
it's the Bat's birthday today, so we have to be nice to the Bat.
Yeah, so he's like at the Vatican they have the Pope or whatever, they have the Holy Father, and then there's 10, 12, 15 people that are running around saying things, telling people how it is. But he's got one, and then definitely one or two that are right with him all the time, like his boy. And that's Tony. Tony be right there with you at the front of the Vatican. And then
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. We do this every Wednesday, and we hope to see you next Wednesday. This is the 12th, so next Wednesday will be the 19th. Can't wait to do the show. Dylan, have a great week. Stay away from the floods.
High ground, baby. High ground.
High ground.
High ground.
Get up on the roof.
That's it. I'm upstairs right now. I'm not going down.
Beautiful. All right. Talk to you soon, Dylan. Thanks.